The loan officer didn't even finish reading the application. He glanced at the first page, checked one box, stamped the paper. 30 seconds. That was all it took. "No," he said, already sliding the form back across the desk. "Your request doesn't meet our criteria." No explanation, no eye contact, no discussion. Just a rehearsed smile, the kind people wear when they're done listening. The man across the desk nodded politely. He didn't argue, didn't beg, didn't raise his voice. He folded the paper slowly, placed it inside his worn folder, stood up, and said, "Thank you." As he walked out of the glass building, the automatic doors shut behind him with a soft mechanical hiss. Inside, the bank went back to business as usual. 3 months later, those same doors would never open again. But no one inside the bank knew that yet, and neither did he. The man wasn't asking for anything reckless. He wasn't trying to gamble. He wasn't chasing some overnight miracle. He needed the loan to expand a small operation he had been running for years. Nothing flashy, nothing viral, just steady work, real customers, real numbers. But those numbers weren't impressive enough on paper. His credit history was clean, but unremarkable. His income was consistent, but not aggressive. To the bank, he was invisible. They were busy approving much larger loans that morning. People in tailored suits, confident voices, applications stamped priority. The man noticed something as he waited in line earlier. The rush. Loan officers moving faster than usual, phones ringing constantly, managers whispering behind glass walls. Everyone looked busy, but not calm. Still, when it was his turn, none of that mattered. 30 seconds. Rejected. For the next few days, the rejection lingered in his mind, not as anger, but as confusion. He replayed the meeting again and again. The speed of it, the lack of questions, the way the officer had already made up his mind before he sat down. Something felt off. So he did what he always did when something didn't make sense. He paid attention. He started small. He read the financial news more closely, not headlines, details. He noticed a pattern. Banks were lending aggressively, approving risky deals, expanding fast, too fast. He spoke to a supplier who mentioned delayed payments from the same bank. A friend complained about sudden changes in account policies. Another friend said his loan was approved in minutes without proper review. That bothered him. Banks weren't supposed to be careless, unless they were trying to stay afloat. The rejection slowly stopped feeling personal. It began to feel accidental, like he had walked into the building at the wrong moment, like he had knocked on a door just as the people inside were trying to keep something from collapsing. So he changed his plan. Instead of borrowing money, he downsized his expansion. Instead of growth, he focused on stability. He delayed purchases, negotiated harder, built slowly, painfully slowly. While others around him scaled fast, he stayed cautious. Some even laughed at him. "Why move so slow? You could be much bigger by now. Banks are literally giving money away." He smiled and said nothing. Weeks passed. Then came the first rumor, a small one, a news article buried under politics and sports. Regional bank faces temporary liquidity pressure. Temporary. That word showed up everywhere. Temporary delays, temporary restrictions, temporary measures. The bank released statements, strong fundamentals, customer funds are safe, operations remain normal. But people who had money there felt something change. Transfers took longer, support lines went quiet, branches shortened their hours. The man walked past the bank one evening, the same building, same lights, but fewer people inside, and for the first time, security guards at the entrance. Then came the weekend. Banks hate weekends during bad news because customers have time to think. By Monday morning, the line outside the building wrapped around the block. People wanted answers. Some wanted cash. Others just wanted reassurance. Employees didn't know what to say. They were reading the news at the same time as everyone else. At 9:42 a.m., trading in the bank's stock was halted. At 10:15 a.m., the CEO released a video statement. At noon, the doors closed. Temporarily, they said. By evening, the word changed. Indefinitely. The next day, headlines exploded. Bank collapse shocked customers. Thousands locked out of accounts. Emergency government intervention. People panicked. Businesses froze. Payrolls failed. Savings vanished into legal limbo. The same bank that rejected his loan in 30 seconds couldn't survive 90 days. The man watched the news in silence. No satisfaction, no relief, just a slow understanding settling in. That rejection had protected him. If the loan had been approved, his money would have been trapped, his expansion frozen, his future tangled in lawsuits and paperwork. He would have been one of the people standing outside that building, staring at locked doors, holding questions no one could answer. Instead, he was working, slowly, quietly, unaffected. Months later, a former bank employee recognized him at a cafe. "You're the guy who applied for that loan, right?" The man nodded. "You got lucky. They stopped approving loans carefully toward the end. Management just wanted numbers." The man stirred his coffee. "I thought it was strange how fast you said no." The employee sighed. "That's because by then we really didn't have the money." Sometimes the biggest failures don't announce themselves. They smile, they stamp papers, they say no without explanation. And sometimes a rejection isn't a closed door, it's a warning. Because the bank didn't reject him to protect itself. The bank rejected him because it was already falling, and he just happened to knock right before the collapse. If you enjoyed this story, stay with this channel, because sometimes the moment that feels like failure is the moment that quietly saves everything. And the next story might make you question every rejection you've ever received.